evening, good afternoon, good morning, wherever you are in the world, and welcome to this CoinDesk live webinar on what banks can expect from the future of DeFi. My name is Nick Lord and I'll be the moderator tonight. DeFi has the potential to change the global financial system completely. It's going to strip transaction costs and move towards next level efficiency and speed. What's more, the whole point of DeFi is that it bypasses the need for centralized, licensed custodians of money. In other words, the banks, and the incumbent banks at that. And what this means is that DeFi isn't merely yet another unwelcome distraction for the incumbent banks, but it actually could be an existential threat. However, what we are going to discuss tonight is how banks can turn this threat into an opportunity. We are joined by 6 panelists from all over the spectrum of the financial world, digital banks, incumbent banks, and service providers. I'm going to introduce each of the panelists first individually, and then we'll move on to onto the discussion. First, we have Peter Hoffman, who is the CEO of CustoDigit. Peter has many years of experience in providing digital financial services, having held various senior positions in the consulting and financial services industry at firms including Capgemini, KPMG, IBM, and PosFinance. Admir Opatia is the head of digital product management at Sygnum Bank. Admir has significant industry experience from working on strategic and regulatory projects for various globally operating wealth and asset management firms, including Credit Suisse and Accenture. Ajit Tripathi is head of institutional business at Aave, a role that sees him building bridges between financial institutions and the crypto/internet of value ecosystem. This includes building banking and payments rails for Binance and Paxful, and working with traditional finance players such as Nasdaq, Deutsche Börse, MUFG, and BBVA. Hervé Francois is the Digital Assets Initiative Lead at the Innovation Department of ING. Hervé has 20 years of experience in working in financial markets in 5 different countries, and he also mentors startups at Startup Bootcamp and at Kickstarter. And he's also joined various hackathons. And last, but by no means least, is Laurent Marocchini. He is head of innovation at Société Générale Security Services, as well as the blockchain leader overall at Société Générale. He has previously held senior positions in other mainstream financial institutions, including BNP Paribas and Credit Suisse. Gentlemen, it's a real pleasure to have you on this panel tonight and to hear your views on what DeFi can do to banks. It's a slightly ominous tone to this, certainly to the build-up to this webinar, which is probably not entirely justified, I think. So if we can, I'd like to start by talking to the banks and hearing what the banks are doing in the blockchain space in general and in DeFi in general. Peter, perhaps from your perspective, you can let us know what you're seeing from banks.
So if I understood your question correctly, right, what the banks are doing in cryptocurrencies and in DeFi. What I see mainly it's here in Switzerland, right, we do have quite a few interesting challenger banks like Sygnum, for example, but there are also others like SIBA, for example. They are providing in a convenient and easy and secure way access to cryptocurrency at first. But we also see that other banks of those challenger banks are more and more tapping into the DeFi world as a slight or a first example of that, providing staking services.
Right. Laurent, perhaps you could describe some of the specific things that SG is doing in both the DeFi space in particular, but then also more widely in crypto.
So hello to all of you. So it's a pleasure to be with you today. So yes, indeed, Société Générale is very active in the blockchain since 2014. We have been one of the top investors in R3 at the beginning. We have quickly written an internal white paper where we have assessed the impact of blockchain in all the different sectors. And also it was a kind of identification where we need to concentrate our efforts and money, of course. So we have defined 5 sectors where we believe that blockchain will make sense in the future. Trade finance, so we are live with Congo and WeTrade. Payment, of course, so with stablecoin, with central bank digital currency. Of course, you have the post-trade, the insurance, and the digital identity. By the way, now we have moved from the experimentation to the new business model. And in 2018, and thanks to the entrepreneurship program of Société Générale, we have taken a big step forward by creating an internal startup, so Société Générale Forge, a platform that is doing the tokenization of financial instruments. So now they are now a subsidiary of Société Générale, and they have achieved a lot since 2 years. 5 operations. So what they have done, the tokenization of an uncovered bond. So the first one, it was without the cash. So the cash leg was outside the blockchain. We have done it in a public blockchain, Ethereum. We have done another one with central bank digital currency of Banque de France, still in a public blockchain. We have issued also still in a public blockchain certificate products also. And the last one, it was part also of the experimentation of Banque de France. We have issued one with EIB as the head of the program, still in the experimentation of Banque de France. And then come our partnership with the decentralized finance. And I suppose you have seen this news. It was 2-3 weeks in the newspaper where we have submitted a proposition of collaboration with the protocol DAO maker, a proposition with the idea to bring as collateral a bond backed by a home loan in order to borrow the stablecoin DAI, allowing us to benefit from the interest of the DeFi. So this proposition of operation is definitely a great example of partnership between the new world of decentralized finance and also the financial institution. So this is definitely the first initiative at the crossroad between the regulated world and the open source initiatives. But for the moment, it's a proposition of collaboration.
That's great. And so it shows that you see this really as an opportunity. Hervé, is that something that you would echo from your institution as well, that you see the opportunities within crypto and DeFi?
Yes, definitely, Nick. I think we had a similar journey than SocGen in that respect. Started in 2014 to look at mainly private permission blockchain and use cases such as HQLAX, for instance, Congo, VACT, or Finality. Then from end of 2017, beginning of 2018, we started to look more specifically on public blockchain and see what was the opportunity in that space. So that ended up with the different use cases on tokenization of assets, on custody. So for instance, Pictor, which is a digital asset custody solution, which is in production. And more recently, since 2020, so we're exploring DeFi. So we did a white paper where we identify what were the benefits and also the risk embedded into the new technology. So yeah, looking forward to discuss that with you today. Thank you.
Thank you. Thank you. Now let's have a look at current market considerations. There's been a huge shift over the course of the last year, I think, as traditional finance firms are moving more and more into crypto, maybe not as wholeheartedly as they would like, but the regulators are definitely keeping a close eye on things. Admir, perhaps you can start by discussing with us what you see as the market conditions that make it a good time for traditional firms to look at crypto. Things like, negative interest rates and other considerations. And perhaps also, as well, you can start by just maybe for those of us who don't know, you can introduce your firm as well. Thank you, Admir.
Thank you, and greetings to everyone who's attending. I think generally the idea of why Signum was founded was really because before 2017, it was actually quite difficult to convert your crypto into fiat, at least in larger amounts, right? A lot of the banks would not even allow you to do payments which would breach some of the patterns, and definitely crypto is not something that a lot of the banks wanted to be connected to at that very time. And so one of the original ideas that the founders of the Signum bank had is, look, we need to have a bank where people who are active in this space can actually use the products and convert the products and go back between the new and the old world, right? So convert back to fiat and to crypto in a very fluent and compliant way. So that's the original idea, right? And I think we were the first one that really got the license globally, focusing only on these digital assets. And that was in August 2019, so 2 years ago, obviously all fully compliant with the local regulator. Now, at that time already, I think we just came out of after the 2017 crash, there was already, you know, a lot of the people were still on the tulip train, and they were calling crypto a huge speculative bubble to some degree, obviously, which was the case. But I think after 2019, when I think it was the third bull cycle, right? Then some people, and we also noticed that from some other banks, which we were also talking to, you know, the tone started to shift. Suddenly people were thinking, look, it's the best performing asset of the decade. It's the third bull run. Is it really a speculation? And I guess most of the banks were really triggered by their clients. Clients really were asking, hey, I have all these nice products, but you have structured products, all fancy stuff. Why can't I buy Bitcoin, right? And we were very much there, I think, at the very right time to harvest this sentiment. And I think now we are still, I mean, Bitcoin just yesterday reached another all-time high. We crossed 100 billion assets under custody into the various DeFi platforms, including Aave, right? So I think it's gotten too big for banks, for generally people who are interested in investing for it to be ignored, right? And I think clients are really driving this mostly, even though the banks are somewhat skeptical. Most of the traditional banks, maybe not hopefully the attending colleagues, but you know, clients were really driving this, and the banks are kind of forced to have an opinion on the topic. You cannot claim tulips anymore after all of these performances and after all of this innovation that has been happening in the DeFi space. So what Signum is doing currently is we started really just plainly with the custody and the trading use cases where you could buy and custodize Bitcoin and Ether and up to 16 other currencies so far. And then we've transitioned, okay, what are additional projects, what are additional products that are being developed on the decentralized web that we can actually leverage for our clients? And as you mentioned, the negative interest rate, political uncertainty in some countries, right, particularly in South America.
Yep.
So these a lot of these sentiments really drove the case for particularly Bitcoin and some of the decentralized infrastructure that was being built. And I think at this very point, I think we're really in the perfect time where we actually need to discuss, okay, what are the next steps to bring the unregulated, the crazy but super innovative DeFi space into the next stage, so that also the services and the products that are being built there can be made available to a broader audience, to a broader clientele.
Right.
So that's the goal of Signum, to be at the forehead of that movement, and obviously to talk with clients and regulators and to make that happen.
Ajit, does that description of where we are in the market right now chime with you?
Yeah,
Do you see
absolutely.
Increasing crossover between the regulated and unregulated spaces?
So I think, you know, we need to, I'll try and put this in a slightly different perspective, right? So everything starts with some innovation. You know, if we regulate before we innovate, then innovation would never happen. So, you know, it's taken us 12 years from the invention of Bitcoin to get to a point where, you know, there is quite a bit of institutional interest. When I spoke to banks about Bitcoin in 2015, it was impossible to, you know, have a meaningful conversation. You pretty much got thrown out of the room. And And then I was, doing a lot of work in enterprise Ethereum and so on. So now I think what has happened is, people have started to realize that blockchain technology isn't about, taking the tech and then putting it behind four walls, right? So it's just creating a slightly distributed database isn't what blockchain is about, right? So the whole enterprise blockchain narrative, it has kind of, it's outlived its utility. Now, so open networks are being built. There is the bigger picture is that, we have an internet that's really centralized, right? So if you have Facebook, Google, Netflix, Amazon, Apple, these guys have too much power, way too much power, right? And they're sort of rent-seeking monopolies. So if you want to sell games on Apple Store, you have to pay them 30%. Then if they want to shut you down, they can do that overnight, and there is no regulation around it. They don't have to explain it to anybody. So internet has become very centralized. There was a time when banking was very centralized, right? 4 or 5 investment banks used to dominate the whole scene. That was pre-Lehman. So centralization comes with its own risks, right? We've seen the Lehman debacle. We've seen the Evergrande crisis now. We are seeing Archegos lose, rehypothecate the same collateral 5 times and cause major losses at investment banks. That's this year. So centralization has its own risks. And what we are trying to do with this, blockchain technology is create more decentralized systems. We are trying to decentralize not just not just financial services, but there is a broader Web3 narrative where we say, look, how do we create systems that are owned by users, systems that are owned by, so like NFT marketplaces that are owned by, the users and by the creators, and we create this two-sided model of ownership, which is different from a model where 5 guys sit in a room and make all the decisions with no transparency, and then so regulated space seems like everything is going well, but it's not, right? So we've locked out a lot of people out of the financial system because cost to income ratios of banks are 60-70% in Europe. We have money laundering happens mostly through banks. So regulation isn't working, right? So, I mean, there is a lot of regulation that's locking out people of the financial system without locking people out of the risk. So you can trade meme stocks on Robinhood all day. So you're not locked out of the risk, but you're locked out of the IPOs because IPOs are happening much later. So regulation isn't necessarily working, right? So how do we start from the first principles and build technology that helps regulators and everyone else, the society, achieves its goals of whether it's consumer protection, market transparency, more efficient systems, right? So bringing more people into the financial system. So we are at the very early stage of this technology, right? So and right now when you think about the prices, I mean everything, we are in an everything bubble, right? So stocks have been going up, property is up 30-40% in the US. I mean, so crypto and stable coins, there's a lot of concern around those, but the biggest risk is the property market in the US. When you think, and in China, we've already seen that. So, I mean, I'm not going to ramble on, but the point is that let's not try to read too much into the prices, right? The prices are high across the board. We are in an all asset bubble. So now the question is, what's the upside in this? And the upside is that we are finally seeing applications that people actually use, right? So it's blockchain technology. Crypto is no longer about buying and selling. It's not just about speculation. We are seeing DeFi apps that have millions of users. We are seeing NFT marketplaces and crypto games that have millions of users, right? So finally, this technology is starting to become create applications that people actually want and use, and that's the Web3 narrative, right? Now, so DeFi is the opportunities for institutions to actually participate in the internet innovation that's already going on. In fintech, what we did is we took the existing rails, right? So we took the existing legacy rails and we put nice mobile apps on them, but we didn't change the infrastructure. For the first time with this technology, we are starting to rewire market infrastructure, right? And that's the opportunity. So what will banks do? I think banks will do what they do today. They are custodians of identity. They distribute financial services, right? They essentially do interact with customers and face off. They do KYC. All of those things will still remain with banks, but we're building the back end of payments infrastructure, trading infrastructure, derivatives, settlement infrastructure. So all on the internet. We're bringing the legacy infrastructure on the internet. And when you look at it very early, it looks clunky and it looks problematic. There are risks associated with it, but we are still 200 billion is a rounding error compared to the size of the financial market. So, when we think about risk, we are not looking in the right places.
Okay. Peter, I want to bring you back in now at this point and talk about the regulators. Are the regulators actually holding back the incumbent banks' adoption of DeFi? Or do you think they're being more nuanced about it? Do you think they're waiting to see what happens? Yeah, what's your sense on what the regulatory landscape is for DeFi and incumbent banks?
It really depends on the jurisdiction, right? We are working in. That's one of the challenges we are having. We don't have standardized regulatory framework worldwide, so it really depends where you are working in. I would say in Switzerland, in general, we do have a very proactive regulator, which is trying to help and make things possible. But of course, it's also a totally paradigm shift for the regulator to work with DeFi, because now you do have regulation in code, right? And that's a totally different understanding for the regulator itself. But I would say it's not the only thing holding the banks back in DeFi particularly, right? Banks also have to admit, if they want to be actually participating in DeFi, they have also to accept the fact, right, that cryptocurrencies is here to stay. And they also have to think about the value proposition they can bring to the table. Ashit just mentioned it before, everything is clunky a little bit and operations isn't really worked out. And that's, in my opinion, really the opportunity for the banks in DeFi or in cryptocurrency in general, that they are able to provide a convenient, secure pathway to the DeFi as well as the cryptocurrency world. And that's actually, if we are making 2 steps back, the value proposition of the bank nowadays already. Nobody wants to store its savings in a steel vault under the bed, right? They are providing convenience. And that's exactly the value proposition they also can bring to DeFi and to cryptocurrencies. But they have to accept that there's a wider shift, cultural shift going on in the population, that people are willing and are actually placing quite a lot of value in digital assets. And regulation is one part, but also the cultural shift and the acceptance of the cultural shift has to be taken.
Completely. Yeah, I totally agree with that. Laurent and Hervé, you know, are you lone wolves within your organizations, or do you think there is a wider understanding of the cultural shift and also the mental shift that's needed to really embrace the crypto world within the hierarchies within your banks? Laurent.
Yes, of course, this is purely a question of innovation dilemma. So we have done a lot since 4 or 5 years in terms of raising the awareness, and we have seen also that our top management has raised the interest for blockchain, because we have made a lot of investment. We have invested in Société Générale Forge, and the sponsor of Société Générale Forge is in the highest level of our organization. So is part of the exco of Société Générale. So indeed, there is a clear understanding of the challenges in terms of technology, but especially in terms of business model. So for me, in terms of awareness, a lot of things has been done, not only at the exco and top management level, but at all the different levels. We have made a lot of awareness session, internal conferences, and so on. So for me, a lot of things has been done for the appropriation of the technology and the understanding of the future of finance. But blockchain, like DeFi, is not a question of technology, it's a question of business model. So regarding DeFi, if we go to DeFi, so it's something new. So even if DeFi was born in 2018, I believe, we are still at the beginning of the journey. We have started the first training and awareness session in terms of DeFi to our organization. So they understand clearly the main challenges, the opportunity, the threats. So, but it's human, and like any changes, you see the threat for the moment. And I compare the DeFi to the fintech 10, 12 years ago. So for the moment, I remember in 10 years ago, fintech, it was a treat for the banks. Now they are doing its partnership everywhere. So it will be the same thing, I believe, for the DeFi, and what we have done in Société Générale with the proposition of collaboration is then definitely a very interesting. We try to mind the gaps between the two worlds, and of course, I believe that we are going in the good sense. But yes, indeed, it takes times, but we have done a lot by the past.
Hervé?
Yeah, so at ING, we also move, from to educate, let's say, our board level towards more like getting a proper strategy. So that's the case for from blockchain, digital asset in general. Like we have a focus on security token, but also a more like a wider approach to any type of token. Having said that, that's true that for DeFi, for bank, so I confirm, Laurent, since 2018 it started, but it's still early days for banks, for regulators, but especially because of the lack of clarity around the regulation. And we will need to have the same journey from moving from the public blockchain to the private permission blockchain back to the public blockchain. Same will apply, I believe, to with DeFi. So we have something which is fully decentralized and with protocol which are fully anonymized. We don't even know who is behind some of those protocols. Towards getting something which might be a centralized DeFi to start with, where the banks will feel more comfortable, because it will be known who are the participant in a liquidity pool or lending pool, for instance, before we can move back to the essence of DeFi. So having something fully decentralized and transparent and so on. But now, like we see already, like the benefits of it. So all the composability, the fact you got the money Lego aspect to it, and you can rebuild different things with different layers. So that's particularly interesting, and to get all the benefits of it in terms of efficiency, finality, settlement finality, and so on, we will certainly need to move the whole end-to-end life cycle from digital assets. It cannot be just taking one part and work in a vacuum. It just doesn't work. So that means also for the banks to reconsider how they approach it, and maybe spin out some entities to start from scratch. To change all the infrastructure. But I believe the gains are so massive that we'll go into that direction. Still need to address some concern about the smart contract. Still like a lot of issue there, and I could even extend in terms of illiteracy sometimes from people. So on tech or finance. But if you think about partnership between the banks and the fintech for the newcomer in DeFi, a lot of things could be achieved to improve the financial market as a whole.
Interesting, very interesting. You both mentioned partnerships, and the new spirit of collaboration that is working its way through the global financial system. I think it's found everywhere. Ajit, I'd like to bring you back. Do you see this kind of collaboration going on? And are there any particular areas where you think a collaborative approach might form the basis of the future of DeFi between banks and the non-regulated players?
Yeah. I think I'm really, first of all, I'm very inspired and really impressed by the work that Laurent and their team have done with MakerDAO in terms of bringing real world assets to DeFi. I think we need to see more of that, right? So there is. It's not that there is no regulatory clarity on anything. There is clarity on, so if depending on the jurisdiction you're looking at, the work that I think Maker and Laurent have done, they've done their regulatory and legal analysis. They've done their research. They know exactly what they're doing, right? So it takes a little bit of, I think, effort and a little bit of courage as well, but certainly a bit of effort to innovate. I mean, you can't, if we don't, we have to try harder. If we wait for regulators to tell us how we should innovate, then we're never going to innovate, because it's not their job, right? Their job is to essentially balance, to create policy that allows innovation, consumer protection, and market transparency to kind of balance, right? So that's what they do. So innovation is something that will have to come from the market, that will have to come from DeFi protocols and engineers like us. It will have to come from innovation teams and banks like Laurent's team. So now we are seeing a lot of interest. So so in terms of the journey, the initial users of DeFi were crypto natives, developers, degens. That then came in high net worth individuals or crypto native whales. Then we started to see family offices, hedge funds, and other proprietary capital that have sort of a higher risk appetite. So we've been traversing so this technology is traversing the curve from high risk appetite to lower risk appetite. And obviously retail banks they need to be at the lower end of that spectrum, right? So you can't be a retail bank and take the same sort of risks that a hedge fund can. Now, so what has happened is that has also helped some of the protocols like Aave and Maker and others to become more mature, right? And also for us to get our practices and technology far more robust than when we started. And now I think we are in a position where we are starting to work with real world institutions. So we are launching, Fireblocks have a governance proposal currently on our way to launch a permission market, which will be a KYC, where all the participants will be entities that already have been KYC'd by Fireblocks LLC. So this is where the rubber really starts to meet the road in terms of institutional adoption. And once that happens, then a lot of regulated, US regulated entities and European regulated entities can participate in the Aave market. Potentially, I'm just imagining here that it's possible for SocGen's, collaboration with Maker to mint like those DAI directly into the Aave permission pool, because it's kind of a permission safe environment. So we can start to benefit from some of the composability. It's possible that some of the insurance protocols and DEXs will come into that permissioned environment. So it's important to realize that innovation needs to happen first, right? So if innovation happens, then markets get excited, and then we have to make the rules. So I think we're going in the right direction. We have also done, one of the things we do is we do a lot of, education, and because what has happened, the innovators are all, 25, 30 years old. The regulators are all 50 to 75 years old. So, and those guys aren't talking to each other. So what needs to happen is, people like me and people on this group who are sort of somewhere in the middle, we need to connect these worlds, right? So we need the regulators to come to the Ethereum Developer Conference. We need them to hang out in the DAOs. We have banks on our Discord channels, right? On the developer Discord. So there needs to be more of a conversation where, the crypto industry doesn't say, oh, leave us alone and we're going to be left alone for the rest of our, because we are innovating. That doesn't work. We also cannot have a scenario where we, start to form rules or impose rules that have been around for 70 years and not start to, say, how do these rules apply to this technology, or what is there a better way to, is there a technology centric innovation first way to actually achieve the principles that regulation is trying to achieve? So I think there needs to be more conversation, productive, constructive conversation between these communities. And I think that's another thing that, banks can facilitate, especially, and it's hard being a bank and innovating, right? So I come from Goldman Sachs and Barclays and all that. So I spent my life in banks. Now, before 2010, we were able to innovate very freely. There was so much financial or mathematical innovation in derivatives. You could make code changes day in, day out and really do things. Now we have, before you make a code change in a bank, you have to get approvals. You have to get a long list of approvals. So banks have become very constrained and it's not helping the consumers, right? So I think we need to sort of create a more, and hopefully in the DeFi, we are seeing a lot of traditional financial talent come into DeFi. There is every day, we're seeing lots and lots of financial talent. So maybe if we can create, if we banks and DeFi, I think what we're doing is software infrastructure. And if banks can participate in the governance of DeFi protocols, right? I mean, like, so DeFi relies on decentralized governance. And there's a lot of expertise in financial institutions. To really create Web3 scale DeFi infrastructure, I think we want to see banks and other financial institutions participate in the governance and bring all of that expertise to DeFi.
Admir, I'd like to bring you back at this point as well. Does that resonate with what you're seeing, as you are both a bank, but you're also you're obviously, crypto is in your DNA, and you're innovative and young. Do you think just the traditional financial system, does it get you? Do you get it?
So we were really fortunate to, again, so be one of the first two banks to get the banking license from the regulator, particularly focusing on this industry. So that means, and I can guarantee you that we were really taken apart with regards to all of the processes, the controls that we had in place, etc. So the regulator was really, really strict when they were assessing what actually we wanted to offer to the market. But I have to say, we're also lucky in Switzerland that we have a regulator that tries to understand the technology as well, right? And what we found is that actually it does help, right? So you can't try to abstract from the technology, but sometimes you really can't. And so an example is, for instance, what the regulator typically does when you come and let's say you propose a new process or a new product, that the regulator tries, for good reasons, to place that in an existing framework that they know, right? They try to see, do I have rules somewhere which match what these guys are trying to do, right? And we've seen often, obviously, with these decentralized protocols and with blockchain, right? That's not always possible. Like some of these concepts transcends what the current rules cover, and you have to kind of find loopholes, etc. So what we found with the regulator is, yes, so we do the work to show the processes, etc. But we also, try to educate in the sense, we demo the tools. We try to also go into a bit more technical details, like, okay, why do you have multiple addresses for Bitcoin on the same wallet, right? A UTXO-based blockchain, etc. We try to explain to them what exactly we're doing here, that they get more comfortable with it. And I think that's absolutely the way to go, right? I mean, we can cry about a lot of us in Signum are people who are, who started early using the decentralized infrastructure. But it's very clear for this to become mainstream, for us to bridge the old and the new infrastructure, we need to be regulated. There needs to be clarity on what is allowed, what is not allowed, and what you must comply with. Also for tax reasons, for various reasons, right? So it's clear that we have to be regulated in some way. And what we found is that if we are proactively engaging with the regulator, also proposing like, look, this is the product, this is the process that we're trying to launch, and this is how it could work, right? Not asking the regulator, shall we do A, B, or C, which then might take very, very long time, right? But actually proposing and then also justifying why we think this is a good process, potentially, if possible, also relating to existing rules that exist, right? So yes, I absolutely believe that we need to take this burden. So those who want to innovate and those who want this innovation to become mainstream, it's absolutely our responsibility to be proactive with the regulator, to educate, and to actually get good rules in place, right? Good rules which still allow us to keep this efficiency which is given on these decentralized protocols, right? When going through a bank, obviously you will lose a little bit of efficiency. There will be, more controls which you will have to do, but the goal is to have the minimum loss of efficiency. And therefore, I absolutely agree. So we need to be proactive and we need to be educators.
It's not often you hear a regulated entity say that it's better to ask for forgiveness than permission, but I think that's I think in this case, I think it is true. I think it's the only way that innovation is really going to happen. We have about 5-10 minutes left, and I want to just remind the audience that you can ask questions of this amazing panel. We have had some questions through already, and I'm going to try and get through some of those. Firstly, what are your thoughts on governments and central banks, especially saying, no, you can't mingle with cryptocurrency? And I think the unsaid part of that is the second part of the question, which is we're going to do it ourselves. So where does CBDCs come into this? And could they actually be the currency of DeFi in the future? Who would like to tackle CBDCs? Peter.
Yep, right. As I see it right now, we do have in DeFi, or most of the DeFi infrastructure is somehow relying on stable coins.
Yeah.
Stable coins, you can question them about the risks you are facing with stable coins or not, but you actually need something like that to have atomic swaps or DVP, right? And from my point of view, actually, it would be a great advantage to the whole DeFi community if CBDC would be available and can be used in a DeFi environment and infrastructure. So I'm really looking forward that central banks are more open to that. I mean, a lot of projects are going on right on in the market, mostly in a POC stage or in pre-POC stage. But I'm really looking forward that something is getting available in a production environment. because I see that it takes out some of the complexity out of DeFi and makes everything more convenient for the new population we are actually heading to. So in my opinion, it's the building block we need.
Okay, we have a question now that says, how long will it take for your blockchain system going to prove officially accepted, and how safe it's going to be? What kind of protocols have you set so far to assure investors? I believe this is for Ajit.
Yeah, so I'll go back to what I've been trying to emphasize, that this isn't about finance. So this is really about how the internet is evolving and how it's changing. Sure, there is a short-term view on it, which looks like, oh, this is all about finance, and of course the word DeFi it conveys that. But ultimately, we are essentially seeing a lot of stuff, the internet and the software eating the world, and of course the financial world as well, layer by layer by layer, right? So I think to really understand and how to regulate this, I think there is a whole generation that needs to get more involved with the internet, and that's how the internet communities are forming, how they communicate, and so on. So and it's, if you're not a digital native and you're not an internet native person, then it takes a certain amount of effort to become part of those communities. And cryptocurrencies are digital internet money for internet communities, right? So there is a and CBDC doesn't substitute for that. So that's because CBDC, unless it's based on an internet standard and starts to create efficient cross-border payment system, CBDC doesn't solve anything. Now, officially accepted, that's a tough one, right? So we are in 1998, and in 1998, Netflix was shipping DVDs and talking about video streaming. And it took until 2012 to really get streaming live at scale, right? So everything takes longer and has a bigger impact, right? So I think that's the key to understand. Now, officially accepted, I think we'll see a whole generational change in regulation, and a generational change in policy. It's you can't put the internet back in the box. So from as a technologist, the right question is, when can we build robust, secure web scale technology for decentralized market infrastructure that's sufficiently scalable, robust, secure, private, all of that stuff. And I think that's it's happening a lot faster than in the age of Netflix. So I would say anywhere between 3 to 10 years.
3 to 10 years. Okay, that's fantastic. We've got lots of questions coming in now. We have lots of people watching, which is great. Okay, question for the banks. What are the key success criteria for banks to break their legacy thinking? How can you unbias yourselves? A bit of a loaded question, but what are the sort of success criteria you guys are seeing within your institutions? You mentioned that it's a board level issue. I think that's fairly significant. Are there any others? Laurent, perhaps you could go first.
I believe that Hervé just talked about that. You need to show the benefit. Yes, indeed, you need to have the sponsorship at the highest level. You need to onboard a maximum number of persons, and you need to show very quickly the benefit of your solution. After, indeed, you have the legacy system, but you can deal with it. And this is what we have done when we have created an internal startup, because we can go very, very fast when you use such formula like an internal startup. So you should have the right team also, because it's very important. Even if you are in a big company with a lot of people, you need to have the team, and I strongly believe that it can make the difference.
Okay.
Quickly, maybe just quickly to echo on this, I think is as you know, bank, we're working in a regulated environment, so we need to comply with that. Is one of the main challenges. But also we servicing clients, so we're always like client centric and problem centric. So that would mean that DeFi will also need to be capable to be easy for the client to be used, but also like follow all the KYC processes, to have availability, reliability, and cannot be down, on those services. You have to provide the service with a certain level of professionalism. And I think at the moment that with DeFi, we can handle all of those aspects and provide the same type of services that we provide on traditional finance under DeFi. then that would be the green light to scale.
Okay, I'm going to hurry things along. We've got quite a lot of questions to get through. How long will it be until we see DeFi insurance products for home, auto, life, and health? Who would like to tackle DeFi insurance?
I can make a quick one. I think it's already happening for some insurance, for instance, against DeFi protocol, for instance, on smart contract. So everything is happening. And if you look at the DeFi in general, there is a services which tackle any single services from the bank right now. So it's just a matter of time if it's not already existing. Ajit, maybe you know one project.
Yeah, so I think the Nexus Mutual is quite a successful insurance protocol for DeFi positions. I mean, and there is no reason why some of those the structures that Nexus and other protocols have created cannot be used in the real world. Now, I would say let's not rush into pushing some of these into the and so Nexus is if you have someone writing insurance or by staking an Nexus NXM tokens, then you can insure anything on the protocol, right? So it's a matter of insurance capacity, not the protocol works. And then the second part is having the legal structure so that that's the ancient code is law debate, right? So the protocol insures a property or a car. The question is how do you sort of feed that data through an oracle so that the DAO or the protocol can efficiently make a decision on whether to cover the protocol or not. So there need to be some bridges between the real world and the DeFi world, like Loha and their team are building with Maker. So it's quite possible for Nexus to be used in the real world context. I don't think it's there is necessarily a need to rush into that right now. I think there is definitely a need for real world insurers to participate in insurance protocols so that they can cover larger financial positions in DeFi. But the systems already exist. It's just a matter of oracles and creating some legal structures so that there is more arbitration before decisions are made, because the real world is quite messy.
Okay. I mean, the fundamental point that you can't take insurance out on somebody else is, I think, is applicable here.
You can, but some work is required.
It's an incentive that shouldn't be there. So here's a very interesting one. In the battle between true decentralization, DAO, and new centralized entities that are leveraging blockchain platforms, the centralized entities seem to be gaining market share and paving the way for adoption. Coinbase, OpenSea, good examples of this. How do you see this unfolding? Is actually DeFi, you mentioned it before, the oxymoron of centralized DeFi. Is that maybe one of the paths that we might take in the future?
I'll go first. So I think
one of them.
Admir, yeah.
So we got that very often, right? People perceive us as people a company who is actually comprised of a lot of people who live the decentralized spirit, but we're still a bank, right? And they're like, how do you live with this duality? But the point is really that the technology behind it, behind what the actual user is for the end client, right, is still quite complex, and it's also error prone, right? You have even just with the gas fees, you have transactions stuck, you have transactions failing on blockchain if you not configuring it properly. So we feel that you will always have the power users, and they will go and they will use the protocols by themselves. They will operate on their wallets. They will make the backup phrases. They will do all of that because that's what they like. They would like to be independent. But there will always be, and I would believe it's a significant amount of population who actually want to abstract from all of the technological part. For them, it's relevant that they can go to Aave and then lend their USDC and get 10% yield in return, right? So that's what they want to get out of it. And how do you achieve that without setting up a wallet, making the backup of everything? And that's exactly where these entities come into play to allow access to those people that otherwise wouldn't even participate in this infrastructure, right? So we basically see ourselves as opening up these products and this infrastructure to an audience which would otherwise never participate. And that's why I see it's not really contradictory, right? I would say it's probably fair to say that there's more people who are afraid of using a wallet than people who are already using it, right? So therefore, I think it's not also contradictory, right? The one does very well go together with the other one. So therefore, I don't see a contradiction there at all. I see there's just a different path how you can get into using these decentralized infrastructure.
It's an access point, not a pivot.
Exactly.
Yeah, it's a distribution. So centralized
yes.
distribution for decentralized infrastructure.
Gentlemen, we have run out of time, and to all our audience, thank you so much for staying up if you are where we are, which is in Europe, or taking time out of your day to watch us. It's I hope you've enjoyed it as much as I have. By the number of questions we've had, I think it's a good indication of how interesting and resonant this topic is. And I think if I could take the liberty of just summing up, it appears to me that the future of DeFi definitely does involve the incumbent banks. I don't see any way in which it wouldn't. We've heard that the technology will be there in 3 to 10 years. We've heard that the regulators are engaging in this area. We've heard that the boards of directors of the big incumbent banks are looking at this personally. So I think all the indications that are there that we're going to find a way forward. What that'll exactly look like, I think is still to be determined. So I want to take this time once again to thank all of our panelists, to Peter Hoffman, to Laurent Maroncini, F.A. Francois, Ajit Tripathi, and to Admir Opadia. Thank you all very much indeed. It's been an amazing event. Thank you. Goodbye.
Goodbye.
Thank you.
Goodbye.